Welcome to a new week here in the stock market. My name's Dez here at Grok Trade. It's Monday, January 26th, 2015, and the markets see bullish territory after an early morning drop. You'll have the S&P up 0.25%, Dow at break even. However, you have Nasdaq up 0.3%, with the Russells doing the best. Small caps up nearly 1% to close out the day. Banks up 0.75%, giving support to today's bullish movement. Furthermore, the VIX volatility index, the fear indicator, down, also giving us support on the bullish side. We have the VIX down almost 7%. Gold off by 1%, silver off by more than 2%. Crude oil down 0.76%. US dollar down a fraction. Transportation index doing quite a bit better than the Dow. It was up 0.65%, and the utilities sector indicator, or index rather, at break even. Taking a look here at the S&P 500. We stalled out, closing out last week. I thought we had a pretty good chance of a blow through today, a big pop. However, we decided to go ahead and pull back. We got a lower high, lower low, but we kind of have a hammer formation, trying to find support at the 50-day moving average and the 20-day moving average. And a lot of coiling taking place here. You can see how the markets are just coiling right here, building up a lot of pressure, a lot of strength here. I say we have a pretty good chance of some follow through to the upside. The big area we're watching here, though, is 2062 is the area of resistance that we need to plow through. Last couple of sessions we've been there, we dropped. Furthermore, the last major swing high we received, we hit that and also dropped. We need to plow through there and find some strength to do so. If you look here at the Dow, big symmetrical triangle, hammer right in the middle of all these moving averages. If we do break out, it's going to be very bullish. Now remember, symmetrical triangles can go either direction. You can get very choppy in the apex of this triangle and break down, which would be very bearish. However, with this hammer coming into the apex, if we do start to go bullish, we have a decent chance of a sizable run. On the Nasdaq, we've been up several sessions now. We have a lot of open space before we hit resistance. However, I wonder if it'll run out of steam before it wants to pull back. The small caps Russells has a lot of upside potential here, but we've had a nice little run. We'll see if we have some more run in it the next few sessions. And gold is in buy territory. Remember how he said no more buying up here, wait for a pullback. We have the pullback now. Look for a buy opportunity on a bounce. Silver, same thing. Look for a good reward to risk ratio. Isn't nearly as good as what we had on gold. So wait for an opportunity for silver on a bull pullback. Make sure your reward to risk ratio is intact. I'm speaking to the Grok graduates of the 301 mentoring program. You guys, there's some setups for you on gold and silver. Use the rules that were taught to you. And something I want to show you on the bank side. If you go to the banks and go to the weekly chart, this is the weekly chart on the biggest index of banks out there. And you'll notice on the weekly chart, we're in this huge trading range between 24.28 and 27.10. A lot of weeks, many months. I mean, all of last year stayed in this choppy sideways market. For the markets to go bullish, we need to break out of this on a multi-week rally to the upside. Or if we're going to go bearish, what you'll see is a breakdown below this 2400 area. And if you see that on volume, gang, that's going to spell disaster for the market. So two big lines that you want to make sure you have on your weekly chart on the banks. So Twitter was up almost 2%. Remember I called on I think Thursday I said Twitter was a buy. So Friday we were up, Monday we were going up. So Twitter's not doing too bad. So we've gone up several sessions, might get a little pullback here, looking for yet another pullback buy opportunity. Disclosure, I do own Twitter. So Microsoft second quarter earnings came out and they came in weaker than expected. So just a heads up to all you guys. Hey, hear from one of our students on the mentoring program next.
My name is Eric Gershon. I'm learning from Des and Mark about the trading business, actually. For me, it's really understanding the exact way to do the trend lines. You know, are they shadows? Are they the close of the candle? That was my main question. I really wanted to understand how to make the trend lines the right way. As Des says, you know, he's pulled back the curtain so you can kind of see how the professionals do it, because essentially that's what we are. That's what I want to be. I want to be a professional trader, you know, and I don't want to be an amateur, and I don't want to trade like an amateur. And that is the thing that I'm learning the most here, is how to be professional at this and how to approach it from that point of view. They have far exceeded my expectation. I think, you know, I know Mark for a number of years, and he has been talking to me about doing this for a number of years, and I've watched him trade, and I just want to be, I'll just take a little bit of the way Mark trades, and I'll be a happy camper. Des, I've been watching the videos, and he's everything I thought he was going to be. You know, to the point where I actually talked to him about, you know, managing my retirement account. That's how, and you know, I don't know him that long, but he knows what he's doing. He's the real deal. You know, these are the real guys. I've been to other seminars, and most of these guys just want to, you know, talk while they're trading. You learn almost nothing. You don't learn about the markets. You don't learn about trend lines. You don't learn about moving averages and what's the right, where should you put your stop. I mean, you know, here you're covering it from start to finish, and that is what I really like.